Welcome back. You're watching us here on Halftime Report, and let's put the focus on the consumption space now. I mean, it's we've been talking about it for a while. It's a Friday, relatively relaxed afternoon post the earnings season as well. So we thought we'll get in Manoj Menon, who is currently the head of research and has been tracking the consumption space for over 15 years now. So what's the call on not just FMCG but the entire consumption basket? Manoj, a pleasure having you in our studios. The big question is, what exactly is taking place in the space right now? What are the key trends that are emerging? There's so much happening. Can you just draw lines from the segments, the dots that we are seeing everywhere?
Mangalam, thanks. So I will put it into two parts, the trends part of it. So over the long term, what I've actually seen is that you can observe some trends in consumer staples or FMCG. But having said that, when it comes to discretionary, it's always better to look at bottom up, right? Okay. So let's cover the trends on the consumer staple space to begin with, right? What we're finding is that there is a stress on consumption in the bottom of the pyramid, very clearly, right? Irrespective of the categories, irrespective of the companies also, right? That's point number one. The reason appears that the inflation seems to have impacted the bottom of the pyramid consumer, right? I really don't think there is any solution for that, from a macro point of view at this point in time. That's point number one. Point number two, most consumer staple companies have had significant price growth in the last 12 to 18 months. That also seems to have impacted some downtrading, some consumers dropping off, which you can see in the volume, performance. So that's one. When it comes to discretionary, I would rather say that, let's say the trend for a jewelry continues to be very strong. Trends, let's say demand for an apparel retail continues to be very strong, right? Or let's say even when you look at a footwear companies, right? For example, a Metro Brands is performing very well, right? Specialty retail. But whereas, Relaxo kind of possibly struggling, right? The answer is similar to consumer staples, right? Relaxo targets the mass market, whereas Metro is mid and premium, right? So, and if you look at spirits, for example, right? I mean, I don't know whether to put it in staples or discretionary, but end of the day, it is consumption, right? Or cigarettes, right? We're not really seeing any trends in terms of deceleration there. And for example, Hina Nagarajan, MD of United Spirits, on record to say that the premiumization continues to be at the same rate as what it was 12 or 24 months back, or even better. So there is no downtrading there, actually.
That's what they say, right? For the vices, you don't
you don't stop, irrespective of whether you're getting hit by inflation or not. But Manoj, pleasure to see you here in the studio. Sure. You've tracked this space, as Mangalam was saying, for I think 15, 16 years now. I'm sure you've seen many earlier cycles of a slowdown. Is it transient in nature? If yes, do you feel that we are close to the mature stage of the down cycle? Where are we in the cycle now?
On the staple side, we reckon that we are at the fag end of the deceleration, right? For two reasons. Point number one, if we assume that the commodity inflation or the commodity index has peaked, right? It is logical to assume that there will be price stability, and more importantly, there will be some price cuts also going into the next 12 months, right? Which means demand rejuvenation can actually happen, right, in consumer staples. When it comes to discretionary, it does appear that we are in the early stages of a deceleration. And history tells you that, typically any deceleration or slowdown in discretionary can't be a one-quarter issue, right? And we have just seen that starting from September. So possibly this is a year of, let's say, FMCG over discretionary, right? I mean, from a relative point of view.
Right. So, while you've been tracking this, and a lot has changed in the last 2 years or 3 years, which hasn't in the last 10 years or so.
Right.
You've had the advent of new age companies. There is, new channels emerging online, quick commerce, etc. So with all these things right now, what are your thoughts on the existing incumbent large players and the valuations that they trade at? Is it investable right now?
The answer is yes. But at the same time, you got to be very careful about which companies you choose, right? Let's talk about consumer staples to begin with, or FMCG to begin with. Now, all of us know that there is an investment winter going on at this point in time, correct? But at the same time, there has been a few companies, right? Let's say take the case of a Honasa, which filed for a DRHP a few months back, etc., who have genuinely created a business out there. Whether it is sustainable or not, obviously time will tell, right? And there is a bunch of companies which have actually they have a business model. The second point is important to understand that, with Google search and trends, etc., there is definitely a democratization of marketing insights, right? So it's not really difficult to start a business and get you a $10 million revenue, for example, right? Or a $20 million revenue. The question is, how do you scale it up?
Exactly.
Now comes to the incumbents, right? If you look at consumer staples in India over the last 20 years, right, they have actually grown by using P&L. Right? There is really no balance sheet requirement, because in India, consumer staples operate on negative working capital, right? You don't really need a balance sheet to grow. In our view, which is a published view over the last 24 months or so, is that we very strongly believe that this is a decade of bolt-ons. Let's say, if you go back and see the history in 90s, right? HLL in those days, before it became HUL later, had a string of acquisitions.
Yes.
Tomco and Ponds and Brook Bond and Lipton, and there's been a bunch of acquisitions which HLL did, right? We are of the view that we have only seen, let's say, an HUL buying GSK is just a curtain raiser or a trailer, right? You will see significant bolt-ons over the next 10 years. For example, Tata Consumer, a company which we like and we cover, we are of the opinion that a significant portion of growth in this decade for a Tata Consumer will actually come from M&As, apart from organic growth.
Sorry?
Mergers and acquisitions.
Mergers and acquisitions. Okay, got that. You know, we are running out of time, but I have so many questions. But what really tops my mind is what's happening with the new age tech companies. And I know you track a lot of them, Zomato, Nykaa. There is this whole, chatter about this path to profitability, right? And some of them have delivered. Yeah. But if you had to separate the men from the boys, which are the ones you like?
No, we actually cover both. Okay. And we like both at this point in time. But that said, Nykaa is down 70% from the peak, right? Maybe similar number for a Zomato also. Now, our view actually is a valuation call at this point in time to begin with, to say that, let's say, for example, something we published recently is about, let's say, 100 rupees is a fair value for the beauty business in a Nykaa, right? In a bear case, right? So I think at this point, both Zomato and Nykaa actually are buyable.
All right. And in the consumer space, 3 topics, what do you have?
Hindustan Lever, ITC, and Nestle. On the consumer staple side, on discretionary side, we like Metro, Go Fashion, and Sapphire.
All right, Manoj.
Metro, Go Fashion, and?
Sapphire Foods.
Sapphire Foods. Okay. All right. Thanks a lot for joining in. Really a pleasure speaking to you, and you should come more often to here in the studio. We would appreciate that.
Thank you.
Well, that's a talk, an in-depth talk on the FMCG industry and the reason for the consumption slowdown. Let's slip into a quick break. On the other side, we'll move to commodities. Manisha Gupta joins in. She has with her Abhishek Rastogi, the founder of Rastogi Chambers.